Right, ma'am. Now starting with section number 15, which is value of supply. One whole and sole sections which carries the entire weight of value of supply on its shoulders. Sure. Now, why do we need to determine value of supply? Because GST amount needs two variables. Value of supply into rate of tax always gives us the amount of GST. Now, rate of tax is not a problem because government has notified rate of GST applicable according to HSN code for all goods and services. So, we need to determine value of supply. Rate of tax we will automatically get from HSN code which is notified by government. So, how to determine value of supply? Section 15(1) says that what is the doubt here? Whatever is your transaction value only becomes your value of supply. If you are purchasing something for 1,000 rupees, 1,000 is the value of supply. If you are selling something for 50,000, 50,000 is the value of supply. But it is not that simple always. So section 15(1) says very simple. No, take transaction value as your value of supply. Plus you do some inclusions of 15(2) and minus you have to do some exclusions of 15(3). So we are saying 15(1) is transaction value, but plus you need to do some inclusions in 15(1) and minus exclusions from 15(1). Then you actually arrive at your value of supply. Chalo. Everyone in the comment section, what is a transaction value? Ma'am, transaction value means price actually paid payable. Very simple. Whatever price I have to actually pay, pay only is my transaction value. But the condition says that recipient should be unrelated. Recipient should not be a related person and money should be the sole consideration. Money, or as we call it price, money or price should be the sole consideration. Means it is not a barter or not an exchange kind of transaction where along with money some other goods or services are given. If at all your recipient is unrelated, if your recipient is not unrelated, then we have to apply rule 28 to determine value of supply. If money is not the sole consideration, then we have to apply rule 27 to determine value of supply. So if we are not fulfilling the conditions of transaction value, then we have to apply valuation rules, which were not applicable at inter CA level, but are applicable at final CA level. This transaction value thing you have also studied at inter, but valuation rules are particular new, which are applicable only at final CA level. So section 15 says value of supply is equal to transaction value plus inclusion minus exclusion, where transaction value simply means price actually paid payable, the recipient is not related, and price is the sole consideration. Understood, ma'am? Now we say that 15(2) inclusions. There are particular 5 inclusions under section 15(2). Now because this is revision, I believe you are already clear with the points. I'll just give you an overview and we'll move further towards the rules. So section 15(2) inclusions include 5 types of inclusions. 5 types of inclusions in value of supply. Clause A says that if any kind of tax, fees, surcharge is payable along with the main supply, any kind of tax, fees, surcharge, etc. is payable along with the main supply, then that will also be formed part of value of supply, not GST and TCS. So other than GST and tax collected at source under Income Tax Act, other than GST, because GST can never apply on GST. So GST will not form part of value of supply. Other than GST and TCS under Income Tax Act, if any other tax is payable in relation to supply, then that tax will also form part of value of supply. Like when you import goods, you also pay GST on customs duty. For tobacco and for drugs, etc., GST is also paid on excise. So any other tax will also form part of value of supply. Second, we say if there is any obligation of supplier which is fulfilled by recipient, any obligation of supplier which is fulfilled by recipient, then that will also of course form part of value of supply. Mr. A sold goods to Mr. B for 10,000 plus Mr. A told Mr. B that there is some 5,000 rupees that I owe to Mr. C, you please pay that also. No, so total consideration if you see, no, is not 10, it is 10 plus 5, which means 15,000 is going to be the value of supply, because this obligation of 5,000 to pay was of supplier which was fulfilled by recipient other than what he is paying to the supplier, then this other amount will also form part of value of supply. Right. Then clause number C says that if there is any incidental expenses incurred by supplier recovered from recipient, any incidental expenses incurred by supplier recovered from recipient like loading, unloading, freight, insurance, commission, testing, packaging, all of these kind of expenses that supplier incurs and also recovers from recipient becomes part of value of supply. Then D point says that if there is any other interest, penalty, late fees. Now by this time we already know that if we are receiving any interest or anything, then the day on which we actually receive according to time of supply provisions becomes we become liable to pay GST on the same, and also this will be taxable at the original rate of supply only. So whatever is the original rate of goods or services that you have supplied, your interest etc. will also be chargeable at that rate only. And the last point is non-government price linked subsidy. Non-government price linked subsidy, it should not be a lump sum subsidy. You should be able to link this subsidy per item, per service wise, and this should also not be received from government. So if it is a non-government price linked subsidy, then this will also form part of your value of supply. So inclusions under section 15(2), no GST, no TCS, other than that all the taxes, obligation of supplier met by the recipient which is not included in the price. So let's say this Mr. B was liable to give only 10,000 to Mr. A, but then there was some additional 5,000 which was not included in this price. This additional 5,000 that B has to give to C, no, this will also form part of value of supply, right? Then any of the incidental charges paid by supplier including commission, packaging, weight charges, loading, unloading, designing, inspection, certification, testing that are incurred by supplier and billed to recipient. Let's say supplier has incurred but we are not recovering it from the recipient. You order books from me, I dispatch the books to you. Now the price of books, let's say 700, the price of books includes everything. No. Now after I collect 700 from you, while dispatching the books, I incur packing charges, I incur courier charges, etc. I as a supplier am incurring those charges, but I am not separately recovering that amount from you. No, therefore it will not be added in value of supply. So supplier has to actually incur this expense and supplier has to recover it from the recipient. Only then it forms part of value of supply. Any other interest, penalty, late fees, and also subsidies directly linked to price, excluding government subsidies. So basically non-government price linked subsidies will also form part of value of supply. Then moving on to section 15(3), which says there are some exclusions from the value. So if I am giving any discount before supply or at the time of supply only, so the discounts given are before or at the time of supply, and plus they are shown in invoice. So when you go to purchase these goods or services, you already know that you are getting these discounts and they are even shown in your invoice. Then in that case, they will not be included in your value of supply. Basically, you can reduce these discounts from your value. But if the discounts are given after supply, then chalo in the comment section everyone tell me what are the three conditions. What are the three conditions that you need to fulfill for after supply discount? Only then government will allow you to reduce this discount from your value of supply. One, whatever discounts are given after supply, they should have been prior agreed. So discounts should be prior agreed. Second, they should be linked to invoice. And third, recipient should reverse the proportionate ITC on such discounts then and then only if all the three conditions are fulfilled. If all the three conditions are fulfilled, prior agreement, linked to invoice and proportionate ITC reversed by recipient, only then such post-supply discounts can be reduced from value of supply. If any of these three conditions not fulfilled, then in that case reduction in value of supply will not be available post supply, right? So like we have staggered discounts, buying more save more offers. So this you already know, they are pre-supply discounts. So at the time of supply only, you go to a mall and they say buy 3 get 1 jeans free. So that is before, at the time of supply, shown in invoice. Therefore you can reduce this amount. But if there are periodic volume year-end discounts that are given to you later on, then you need to check whether a prior agreement, linked to invoice, proportionate ITC reversed, all three conditions satisfied, then I can reduce, otherwise I cannot reduce. And secondary discounts which were never agreed only at the time of sales, then to they are post supply discounts not agreed, these things cannot be reduced from value of supply. However, to settle your own accounts, you can issue a commercial credit note, but that commercial credit note will be without GST, because GST liability reduction now will not be allowed to you. Alright, ma'am. Here we complete section 15.1, 15.2 and 15.3. Now moving on to section 15.4, which says, what if transaction value cannot be accepted as value of supply? Why, ma'am? Because let's say recipient is a related person or money is not the sole consideration. Then what to do? Then you have to apply valuation rules under GST, and valuation rules start from rule 27. So rule 27 says that what if money is not the sole consideration? Let us take an example. I supplied a mobile. Riddhi, being a supplier, supplied mobile to, let us say, Priyanka. And Priyanka gave me 50,000 rupees plus a calculator in consideration. So now 50,000 cannot be taken as value of supply. Why? Because 50,000 is not the sole money. No, I have also received some additional goods or services. So now how to determine the value of supply? Okay. So now first point, you always have to follow the chronology. Chronology means you will go by the step by step only. If value can be ascertained using this step, then I will not go to further steps. Only and only if value cannot be ascertained using this step, then only I will go to step number 2. So you cannot directly go to any step which you feel comfortable like. You will always have to follow the chronology under rule 27. Now the chronology says that, is open market value of supply available? I have supplied a mobile for calculator plus 50,000. Now let us assume this mobile normally in market is available for 52,000 to anyone. This is the open market value. So without seeing any other thing, 52,000 only becomes my value of supply, which is the open market value of the mobile. But let us say this is one of a kind mobile I made particularly only for Priyanka. There is no open market value of this mobile available. Then what money I received? I received 50,000 plus what additional consideration I have received? Calculator. When you check the fair market value of calculator, that today if I go to market trying and selling this calculator, ma'am, it can be sold for 1,000 rupees. Then 51,000 becomes my value of supply. So step number 1 says that whatever supply you have made, that is mobile, is open market value available? Yes. Then you take that only. If open market value is not available, then I am receiving some money plus whatever additional consideration I am receiving, I will take fair market value of that. Ma'am, that is also not available. Then you check, okay, whatever mobile I have supplied to Priyanka, is there a like, kind and quality of mobile available in the market? Not same, but a mobile which has similar features, similar characteristics, that the recipient would be unaffected, whether they use this mobile or that mobile. If that is available, and ma'am, that mobile is trading, let's say, only for 51,500, then no problem. 51,500 becomes the value of supply. Ma'am, this is also not available. I made such a unique mobile phone for Priyanka that not even a like kind quality of mobile phone is available. Then the final option available with me is to take what money I have received, 50,000 plus monetary value of the calculator. And how do we calculate monetary value of anything under GST? Monetary value of anything simply means 110% of the cost. So let us say Priyanka manufactured that calculator for 500 rupees. Then in that case, 500 into 110%, which is 550, will therefore I will say 50550 is my total value of supply. So 110% of whatever is the cost of production or acquisition, or if service is provided, then whatever is the cost of such additional consideration, taking 110% of that, I will add to the money that I am receiving, and that becomes my value of supply. You always have to follow the chronology. You cannot break the chronology under rule 27 except for services, because understand, even if by this I cannot ascertain value of supply, no, then last option is to go to rule 31, which says that residuary method. Now according to your best judgment, what is the value, keeping all the other provisions in mind, that only becomes my value of supply. So I will always follow the chronology except for one exception, and that one exception simply says that if I am supplying services, no, then determining cost of services is little difficult. Let's say there's a doctor doing consultation and a person giving something in return. Now for consultation, what exact cost is incurred? Let's say for hair cutting services, what exact cost is incurred for one particular service? If I sell you lectures today, I provide teaching services, let us say. Now for one student teaching services, what exact cost I am incurring? It is very difficult to ascertain. Therefore, taking 110% of cost would be more difficult rather than going by the residuary method. Therefore, only for services, you can apply Rule 31 before Rule 30 also. But otherwise than that, and for goods also, in all the cases, first you will check open market value of whatever you have supplied. Then you check no, not available. Then money plus FMB what I have received. Not available. Then like kind quality of what I have supplied. Not available. Then I will take money plus monetary value of whatever consideration I have received. If even nothing is available, then the last option available is Rule 31, which is residuary method. And in case of services, simply supplier may take Rule 31 before Rule 30 because determining cost of services is slightly difficult. Bolo, clear? Everyone understood Rule 27. How to determine value of supply when money is not the sole consideration. Quickly tell me yes so that we can proceed further. Right, ma'am? Done. Chalo. Then moving on to Rule 28. Now, Rule 28 talks about whenever you are dealing with your related person or distinct person, then simply taking transaction value is not acceptable. You will have to determine value of supply using the valuation rules only. So, Rule 28 says that. Rule 28 says that we have two sub-rules, 28.1 and 28.2. 28.2 we have already completed along with the chapter of value of supply. If you remember, that if a company is giving corporate guarantees with respect to loans being obtained by a related company, then in that case 1% of the guarantee amount or actual consideration, whichever is higher, becomes the value of supply. Right? If we are giving services to our related companies, corporate guarantees to related companies, then in that case 1% of guarantee amount or actual consideration, whichever is higher, only becomes the value of supply. That is Rule 28 sub Rule 2. Now Rule 28 sub Rule 1 for all the normal types of transactions that we are doing with related or distinct person. So very simple. It is similar to Rule 27 only. Is open market value available? Yes, take that. If not available, you simply take like, kind and quality because there is no additional consideration point involved here. No. So we strike off both the points of additional consideration and we are simply left with open market value available? Yes. If not, take like, kind, quality. If not, you apply Rule 30-31 and determine value of supply. So Rule 28.1. Rule 28.1 simply says that open market value available, take that. Not available, like and quality. Not available, apply Rule 30, Rule 31. For Rule 28.2, we say corporate guarantees, 1% of guarantee amount or actual consideration, whichever is higher. Right. Now we have a proviso to Rule 28 which says that, see, proviso is particularly applicable if the related person or distinct person to whom we are supplying the goods are supplying those goods further to some unrelated customer. So let us say I supplied my goods to a related person. Now whatever answer I get according to open market value, like and quality, Rule 30, Rule 31, that answer I will write. Then I can compare it with proviso 1 to Rule 38, to Rule 28. The proviso says that if I supply to my related or distinct person, and they further supply it to their customer who also should be unrelated to them, then in that case whatever price they are charging here, no, I can simply take 90% of that price to be my value of supply. So this 90% price or this answer that we got according to this open market value thing, whichever is beneficial to us, what will be beneficial? The lower amount will be beneficial because lower the value of supply, lower the GST. So whichever is beneficial, that amount I can simply take. So going by open market value, not available, like and quality, not available, Rule 30, Rule 31. This is only the value of supply normally. But if my related or distinct person is further supplying the goods to unrelated customer, then at whatever price they are charging to their unrelated customer, I can take 90% of that price. Out of both these two figures, whichever is beneficial to me, no, that I am open to accept. There is absolutely no problem with respect to anything. Plus, you forget everything. You forget all the provisions. You forget rule 28 sub rule 1, you forget proviso. If at all, whenever you are supplying to your related or distinct person and they are eligible for full ITC, if your related persons are eligible for full ITC, then in that case whatever you declare in your invoice only becomes the value of supply. So we are saying you forget everything. If you are supplying to your related distinct person and they are eligible for full ITC with respect to whatever you are supplying, then the value that you declare in your value of in your invoice is going to be the deemed value of supply. Say yes, everyone. Now, particularly talking about Rule 28 Sub Rule 2. Notwithstanding anything in 28.1. So you forget whatever you studied in 28.1. Now, particularly for one type of transaction which is giving of corporate guarantees. One thing in relation to guarantee we have already studied in the chapter of supply. That if a director is giving personal guarantee to the company, director being a related person of the company, this transaction will now be falling under deemed supply even without consideration. But because of RBI provisions, you cannot ever charge consideration to give a personal guarantee as a director, and therefore open market value is only 0. Therefore value of supply is also 0. Got it, ma'am? Now what we are talking about in Rule 28 Sub Rule 2 is with respect to corporate guarantees. That is with respect to corporate guarantee. So here we are saying that, let us say company ABC is the holding company of company XYZ being a subsidiary company. Company XYZ wants to take a loan from the bank, and therefore this related person ABC Limited being the related person of XYZ Limited is giving guarantee, corporate guarantee on behalf of XYZ Limited to bank. Now tell me who is supplier and who is recipient. First of all, for the service of corporate guarantee, who is supplier and who is recipient? For the particular supply of corporate guarantee, who is supplier and who is recipient? Ma'am, we understand that the person giving the corporate guarantee, ABC, is going to be the supplier here. And the person for whom guarantee is given to the bank, who is taking the benefit of this guarantee, XYZ Limited, is going to be recipient. Right, ma'am? And they both are related person here because holding subsidiary relationship. We understand. So should this be valued according to Rule 28? Yes, ma'am. Now here we are saying again. Here again we are saying that, see, if my recipient is eligible for full ITC on this corporate guarantee, then to whatever I declare in the invoice for giving guarantee, that will only be accepted. But if my recipient, who is located in India, I am saying that my recipient who is taking the loan should be located in India only. This is an amendment now, which means if guarantee is given to a company outside India being related person, it will not fall under Rule 28.1. Particularly, recipient has to be in India who is taking the loan. Then in that case, we are saying that this will fall under Rule 28 because two related companies are entering into a transaction where one related company is giving corporate guarantee to another related company to take loans. And the company taking the loan should be a company in India only. If ITC is available to that company for corporate guarantee service, then to whatever we declare in the invoice will only be accepted as the value of supply. But if ITC is not available, for any reason, it could be possible that my related company who is taking the loan is not even registered. It is possible they cannot take ITC. Now what to do? So here we are saying that if the company taking the loan, availing the corporate guarantee services, is not eligible for full ITC, then what should be the value of supply? Here we are not saying open market value, etc., anything. No. Government has given a straightaway formula to calculate the value of supply. Government is saying whatever is the guarantee offered per annum. This per annum word is also now added via amendment. I will explain you the significance of the same in next 2 minutes. Okay, ma'am. So whatever is the guarantee offered per annum, 1% of the same, or what actual consideration my related company is charging to give me corporate guarantee, whichever is higher will be taken as the value of supply.
See, understand, 1% is the taken off the guarantee amount and not the loan amount. So let's assume my related company is taking a loan for 50 lakh rupees, but I am giving a guarantee only of 40 lakh rupees. So 1% will have to be taken off 40 lakh and not of 50 lakh. So what is the loan amount is not relevant here. For what amount guarantee is given is relevant here. So 1% should be taken off the guarantee amount. Second is, recipient can take full ITC irrespective of whether loan being actually disbursed or not. Okay. So here we are saying, if at all the recipient is eligible to take ITC on GST paid on corporate guarantees, recipient can take the ITC as soon as guarantee is being issued. What practically happens is, once the company gives guarantee, bank will take some time, process the loan, then disburse the loan, and then the transaction is completed. A government is saying the transaction that we are talking about here is the corporate guarantee transaction and not the loan transaction. So my job, ABC Limited job, will be over as soon as they issue the corporate guarantee. XYZ Limited will now take a loan from bank and all, that's a separate transaction. No. So whatever GST XYZ has paid to ABC only for corporate guarantee services, I can take the ITC once the guarantee is issued. Even if loan is not disbursed, that's absolutely fine. I don't have to wait for the loan to get disbursed to take the ITC for the guarantee service GST that I have paid. So recipient can take full ITC irrespective of loan being actually disbursed or not. Then we say, if the loan is taken over by another bank or financial institution under the same corporate guarantee, there will be no impact on GST. What we are saying, let us say my recipient XYZ initially took a loan from Axis Bank. Now this entire loan, let's say, is taken over or shifted to HDFC Bank. But the corporate guarantee still continues. ABC had guaranteed the loan, and till date also this loan is still continuing to be guaranteed by ABC only. Again, no GST impact will come. But let us say, because of change of bank, I had to issue a fresh guarantee, or this existing guarantee is now renewed. Then again, GST would be payable according to these terms only. Right, ma'am. Then we are saying, if the guarantee is provided by more than one entity or a co-guarantor, then GST will be proportionate. So let us say XYZ Limited took a loan. There is a company ABC Limited holding 36% shares in XYZ. There is a company PQR Limited assume holding 52% shares. 52% shares in XYZ. Now we know that they both are related only, because more than 25% shares you are related only. So now we say that these two people combinedly give a guarantee to XYZ to take a loan. The loan is, let's say, for 10 lakh rupees. ABC is providing guarantee for 3 lakh rupees, and for 7 lakh rupees PQR is providing the guarantee. Then what we will simply do, we will apportion the amount. So here 1% of 3 lakh and here 1% of 7 lakh. So whatever is the total consideration, either you that apportion in ratio of 3:7, or 1% amount you apportion in the ratio of 3:7. So if two or more people are giving guarantees together, the amount is of course going to be proportionate according to the what guarantee I am giving. Right, ma'am. This point I'll explain you later. Then we say 1% amount is to be taken on per annum basis. So let's say my recipient is taking a loan of 10 lakh rupees for 5 years. Then 1% of 10 lakh is only for 1 year. It has to be multiplied by 5 if the tenure of the loan is 5 years. Or let's say my recipient is taking a loan only for 6 months. Then 1% divided by 2. So it will be simply 0.5%. This per annum word is now inserted via amendment. Initially, this was not per annum. So what people used to do, simply on 10 lakh, when percentage matter is over. Government is saying no. If the tenure of loan is 5 years, no, then 10 lakh into 1% into 5 you will have to do. So we are saying that this 1% has to be multiplied by the number of years for which the guarantee is offered. So 5 years, 5%. 6 months, 0.5%. So here we are simply saying, if ITC is eligible, no, then you forget everything. For entire Rule 28, this proviso remains common, that if my recipient can take ITC, then though I will forget everything, and whatever actually I am charging, showing in the invoice, that only becomes my value of supply. If ITC is not available to my related person and I am providing a corporate guarantee, in that case, I will take 1% of guarantee amount per annum, or what actual consideration I am charging to issue this corporate guarantee, whichever is higher. will be taken as the value of supply.
Rule 29 talks about value of goods made or received through agent, not services, only goods. For agent particularly, we read in para 3 of schedule 1 of GST, section 71C, schedule 1 para 3, that supplies made between principal and agents, even without consideration, are also considered as supply. Then how to determine value of supply in all of those cases? So rule 29 says that value of supply of goods made or received through an agent, you have an open option available. No need to see any other thing. There is an open option available, that is open market value of the goods or 90% of whatever price the next person is charging from their unrelated customer. Whichever amount you want, you can simply opt for that. So open market value or 90% of price charged for sale of goods of like and quality by recipient to his customer. If nothing is available, then you can simply take rule 30, rule 31. That is all. So rule 29 is very simple. Whenever supplying through or receiving through agent goods, you have an open option to take open market value or 90%. If nothing available, rule 30, rule 31. Now understand, for all related person, we apply rule 28. But for agent, we apply rule 29. Ma'am, what if we have a sole agent? What if we have a sole agent or a sole distributor? Then what to do? In case of sole agent, we will say, according to SOFA Corps that we have studied, according to SOFA Corps, sole agent is always a related person. Sole agent or sole distributor is always a related person, and therefore for sole agent, we will say that rule 28 will apply, and for all other normal agents, rule 29 is going to apply. Keep this thing in mind for MCQ purpose. Got it, ma'am? Here we complete section 15.4. Valuation rules starting from 27, 28, 29, 30 and 31. Now section 15.5, which talks about special rates for some special services. So we have some notified services for which special provisions for valuations are applicable. First of all, rule 31A. Rule 31A talks about lottery, betting, gambling, horse racing, etc. Now, if lottery is being supplied, then lotteries are organized by state governments. So whatever state government notifies in the official gazette, whatever price of the lottery ticket that is notified in the official gazette, or the actual price for which the lottery is sold. So the actual face value for which lottery is sold or the price that is notified in the official gazette, you consider them to be inclusive of 28% GST, and whichever is higher becomes your value of supply. So let us say if the price for which the ticket is selling, the normal face value of the ticket is 200, but the price notified in official gazette, is 250, then you will consider both of them to be inclusive of GST, which means 200 divided by 128%, which comes to 156.25, and 250 divided by 128%, which comes to 195.3125. Whichever is higher, which is 195.3125, that becomes my value of supply. So face value of ticket or price notified in the official gazette by the state government, whichever is higher, deemed to be inclusive of 28%, you make it exclusive, and that becomes your value of supply. But for betting, gambling, horse racing, whatever total 100% amount you put in the betting, gambling, that entire 100% of the face value only becomes your value of supply. And then rule 31B, which talks about online money gaming. Again, online money gaming simply says that whatever total amount the player is putting in the game, now that amount could be in the form of money, money's worth, or virtual digital asset. Whatever you are putting as money's worth or virtual digital asset, if the player is putting anything to play the game, no, that entire 100% of the total amount paid or payable by the player only becomes the value of supply. Let's say some amount remained unutilized. I was not able to use entire amount in the game. Therefore, I took refund of some amount. Doesn't matter. Still, once you paid in the game, no, it becomes applicable to GST. So even if some amount is returned or refunded to the player, no, including any reason, let's say the player did not participate in the game and therefore we are returning the amount, then also this shall not be deducted from the value of supply and it will still be considered as value of supply. So whatever money's worth or virtual digital asset are deposited in the game by the player, entire amount is known as value of supply, and entire amount is going to be taxable under GST. Right, ma'am. Rule 31C talks about casino. Again, this is the same provision. For online games, you directly put the money in the games. But for casino, you first using the money, purchase tokens, chips, coins, tickets, etc. Or you deposit the money in the game, scheme, competition, activity, whatever it is. The total amount, the 100% of the amount that you are putting in casino to purchase this tokens, chips, coupons, or directly to put the money in the game, that total 100% amount only becomes your value of supply. Even if something is returned or refunded to you, similar to Rule 31B, will again not be deducted from the value of supply, and the entire amount once given to casino becomes value of supply, and GST will be applicable on the same. Only and only, let us say I am winning something. I won something in the game, I won something in the casino, and I decide to not withdraw this money and to put this money in the game only and further play another game, then it will not be taxable. For Rule 31B and 31C, only this applies. For Rule 31B and 31C, which is online money gaming and casino. So only and only for online gaming and casino, if I am winning something, and I decide to not withdraw this winning, but to continue using this money only. So without withdrawing, I want to use this winning in a further event, then it will again not be, then again this shall not be considered as the amount, and this will again not be taxable under GST. Otherwise than that, 100% of the total amount that I'm putting in the game will be liable to GST. Bolo yes everyone. Everything is clear till here to everyone? Chalo, in the comment section, give me a thumbs up. Where are you all? Hi. Everything is clear. Then moving on to Rule 32, which talks about special valuation rules for certain kinds of supplies. There are total 5 types of transactions. For which we have special optional valuation methods available. So Rule 32.1. Rule 32.1 says that there are these 5 types of transactions for which special rules are available. The rules then start from Rule 32.2. So Rule 32.2 talks about Forex Transactions. Rule 32 talks about Forex Transactions. So now in Forex Transactions, a question from Rule 31B and 31C you will find in May 24 RTP also, and you will find in May 24 question paper also. And they are both same to same ditto questions, only figures are different. So this was a bonus for May 24 students, because every student usually solves RTP and then only goes in examination. May 24 question paper had almost 10 to 12 marks of ditto from May 24 RTP only, and this being one of the question which was asked from Rule 31B, 31C, exactly same in examination. So do not even try to skip RTP, at least for your attempt, and 1 or 2 attempts prior to your attempt. You will definitely score at least 10-12 marks from these 2-3 RTPs only. Right. Now moving to Rule 32.2, which talks about purchase sale of foreign currency. Now in Rule 32.2 also we have 2 options, 32.2A and 32.2B. You are open to choose any of the option that you want for purchase or sale of forex currency as a forex dealer. So here we will first discuss Rule 32.2 Clause A. Does the 2 currencies involve INR? Yes or no? So let us say we are exchanging dollar for rupee, or we are exchanging yen for dollar. 2 types of transactions available here. In this transaction, both the currencies being exchanged are not involving INR. Then what to do? You convert currency 1 into INR, you convert currency 2 into INR, and whichever is lower, 1% of that amount becomes the value of supply. So 2 currencies being exchanged, and we know that both the answers will be somewhere near only, because if the 2 currencies when exchanged converted into rupee, the amounts are not near to each other. There are arbitrage opportunities possible, right? So always when converting the 2 currencies into equivalent INR, they will be somewhere near to each other only. So from that also, whichever is the lower amount, 1% of that lower amount becomes my value of supply. But the 2 currencies that I am exchanging involve INR. I am exchanging dollar for rupee. Then in that case, next question that you will ask, whether RBI reference rate is available for this, let's say dollar rupee reference rate is available, but we exchanged, let us say, a currency of Kazakhstan, tenge. So tenge to rupee. Now tenge rupee reference rate is not available. Then what to do? Whatever INR, whether I exchanged tenge for rupee or rupee for tenge, I gave INR or I received INR, doesn't matter. If the exchange rate for my foreign currency that I am exchanging is not available, then in that case 1% of whatever I am receiving or paying, that only becomes my value of supply. So whatever INR I am receiving or paying, that becomes 1% of that becomes my value of supply. But ma'am, the currency in which I am exchanging with rupee, the reference rate is available, then you calculate your actual profit. Let's say dollar rupee rate. As of now, $1 is equal to 80 rupees according to RBI reference rate. We actually, the forex dealer is earning a 2 rupee profit per dollar and he is charging 82 and we exchange $100. So simply 82 minus 80 into 100, whatever is your actual buying selling rate minus the reference rate into foreign currency, whatever the forex dealer is actually earning, that becomes the value of supply and GST will be applicable on that amount. To summarize, the two currencies being exchanged, do they involve INR? No. You convert both currencies into rupee, lower amount into 1% becomes value of supply. Ma'am, currencies involving INR but reference rate not available, then 1% of rupee given or taken. Ma'am, currency involves INR, reference rate is also available, then what are you waiting for? What is your actual profit from the reference rate? No, that actual profit only becomes the value of supply. Or if you do not want to use this chart method, then we also have a slab rate table method available. But if you are opting for this slab rate table method, at least till pending financial year, like let's say in September 2024, I decide to come from chart to this table, then at least for 31st March 2025, I will have to stay with this table method only. You cannot keep shifting all the time. You can come from chart to table anytime, but table to chart, you cannot go then for till 31st March, then only next year you have an option to again go back to the chart. So the person supplying service may also exercise this slab rate ka method, but in this case, if once this is opted, you cannot shift to the 32 to A for remaining part of the financial year. And here we are simply saying that if the currency is exchanged up to 1 lakh rupees, then up to 1 lakh rupees, 1% of 1 lakh rupees or 250, whichever is higher, becomes the value of supply. So let's say I am exchanging 74,000 rupees, then 74,000 into 1%, which is 740 or 250, whichever is higher, 740 becomes my value of supply. So minimum amount always will be 250, because let us say I exchange only 20,000, then 1% of 20,000 comes as 200 or 250, whichever is higher will be 250. So answer can never be less than 250 in this table method, because 1% of the amount exchanged or 250, whichever is higher, at least 250 will be the answer. But ma'am, I exchanged 1.5 lakh. Then on first 1 lakh, you take 1%, which is 1,000. Then remaining 50,000, we will take 0.5%. We are saying whatever is exceeding 1 lakh, up to 10 lakh rupees, you take 0.5%. So on first 1 lakh, 1,000 is fixed. And for remaining 50,000, I will do 0.5%. But ma'am, what if amount is greater than 10 lakh rupees? Then what to do? Let us say I want to exchange 12 lakh rupees. Then for first 1 lakh, 1% is fixed, which is 1,000. For remaining 9 lakh, 0.5% is fixed, which is 4,500. And for remaining 2 lakh, we have to take 0.1%. For anything over and above 10 lakh rupees, we take 0.1%. So 0.1% of 2 lakh will come as 200 rupees. So this is going to be my total value of supply, and this can be maximum 60,000, because whatever final answer you arrive at, you have to compare it with 60,000, and whichever is lower becomes your value of supply. So let's say this amount comes as 75,000, then 75,000 or 60,000, whichever is lower, 60 will be the answer. So the range of the answer in 32 to, there is no range in 32 to A, right? You have to follow the rules and you get the answer. But for 32 to B, 32 to be table method, we have a range that minimum answer will be 250 and maximum answer will be 60,000. Up to 1 lakh 1%, more than 1 lakh 0.5%, and more than 10 lakh I will take 0.1%. Right. Then 32(3) talks about air travel agent. For air travel agent, domestic booking 5% of basic fare, international booking 10% of basic fare. What is basic fare, ma'am? The same fare on which airline companies are paying commission. The same amount, the same fare, excluding all the charges, all the kind of taxes, excluding everything. The basic fare on which airline companies are paying commission, 5% and 10% of that basic fare for domestic and international booking respectively becomes the value of supply. Then talking about rule 32(4), which is life insurance. Now, this is not for general insurance. This is only and only for life insurance particularly. Whatever life insurance you are taking, if it is only risk coverage, there is no investment purpose, no savings purpose, whatever whatever premium amount you are paying is only and only for your risk coverage, then 100% of your premium, entire 100% of your premium only becomes the value of supply if it is only risk coverage. If it is single annuity plan, then 10% of premium becomes value of supply. For only risk coverage, I will say 100% of the premium. For single annuity plan, 10% of the premium paid. But if it is savings policy means risk plus investment, both the things involved here. I received as an insurance company a total premium of 100, out of which 80 is for investment and 20 is only for the risk. Then in that case, if this 80 that I am going to allocate to investment is prior intimated to the policy holder, while issuing the policy to the policy holder, while collecting the premiums, at that time only I had made this thing very clear that out of 100 premium I am going to allocate 80 to investment, then I can reduce this 80 and 20 will be my value of supply. But ma'am, I received the premium of 100. I actually allocated 80 to investment also, but I did not intimate this to policy holder at the time of collection of premium. Then entire 100 will go under all the other residuary cases. And in that case, all the other residuary cases say that for first year, 25% of the premium becomes value of supply, and for second and subsequent years, 12.5% of the premium becomes value of supply. So let's say I received a total premium of 100. I received a total premium of 100. If it is only for risk coverage, 100 becomes value of supply. If it is for single annuity plan, 10 becomes the value of supply, being 10% of the premium. If I actually invested 60 from this, 60 is allocated towards investment. If 60 is allocated towards investment and it is intimated to policyholder, then 100 minus 60 is equal to 40 becomes value of supply. But if it is actually allocated but not intimated, while collecting the premium I did not intimate it to my policy holder, then for first year it will be 25%. So 100 into 25%, then 25 becomes my value of supply, which comes with all other residuary cases. Say yes everyone. Yes ma'am. Then taxability of no claim bonus. This is not restricted to life insurance. No claim bonus is for general insurance, all kind of insurances. Now no claim bonus simply means that if in this year I did not claim anything, let's say I took a car insurance, and I did not make any claim for entire year for this car insurance. So while next year when I renew my insurance policy, the insurance company gives me something named as no claim bonus. They are happy that I did not take a claim, and therefore they will give me some discount in my premium to be paid this year, which are known as no claim bonus. So whatever no claim bonus I receive, will that be taxable under GST? The answer is no, because I never entered into a contract saying that I will not lodge any claim, therefore I should receive no claim bonus. No, I did not agree to refrain from lodging a claim. Understand, there are three things: agreeing to, refraining to do something, to tolerate something. I did neither of the three. I took the insurance contract, I took the insurance policy primarily because I wanted to claim in case I injure a loss, in case I incur a loss, because I did not actually incur any loss. Therefore, I did not take the claim, and therefore company gave me a no claim bonus. So this is not a supply only, because I never entered into a contractual obligation. If it is no supply, it should not be taxable under GST, and also because it is prior agreed. Next year, if I have to pay a premium only of 90 because I got a no claim bonus of 10, then now GST will be payable on this 90 only, which is net premium after reducing the no claim bonus. Right. So no claim bonuses are not taxable under GST. Then Rule 32.5 talks about dealing in second-hand goods, buying, selling of second-hand goods. Now, particularly keep in mind, while purchasing these goods, if you have availed ITC matter over, for any person availing ITC, normal valuation rules will only apply. Means whatever is your sales value, total transaction value, only becomes your value of supply. But while purchasing these goods, I did not avail ITC, then you can take benefit of Rule 32.5, which talks about second-hand goods, which says that at the time of purchase, if you did not take any ITC, then selling price minus purchase price, means whatever is your margin earned, whatever is your profit earned, only this will be value of supply, and on this margin only you are required to pay GST to government. Therefore, this is known as a margin scheme. But margin scheme is applicable only when ITC is not availed at the time of purchase. If in any case you have availed ITC, then normal valuation rules, means entire sales value becomes your value of supply. But if at the time of purchases you have not availed ITC, then in that case, selling price minus purchase price, your net margin becomes as your value of supply. Ma'am, if we have incurred losses, then let us say selling price is less than purchase price, I have incurred a loss, then the value of supply will be 0. Of course, there can never be a negative value of supply possible. So if your selling price is less than purchase price, then in that case, value of supply will be 0. This defaulting borrower case we've covered in class. I'm not taking in revision because not very important for now. Then moving on to Rule 32.6. Now Rule 32.6 talks about if any voucher, coupon, token, stamp, etc. has been issued. If it is issued, let's say for 900, but it is redeemable for 1000, tell me what will be the value of supply? An Amazon voucher that you purchased for 400 and gifted to someone, that person can redeem it for 500. What will be value of supply? Value of supply will be 500. Your value of supply will be 1000. Basically, the redemption value, the value at which you can redeem this voucher, coupon, token, stamp, that redemption value and not the issue value is going to be the value of supply according to Rule 32.6. So money value of whatever goods, services or both that are redeemable against such coupon, token, voucher, etc. only become your value of supply. Then talking about, is this stream clear now, guys? I think it's clear now. It is raining very heavily here, therefore Wi-Fi and network, nothing is working. I am taking this live stream on mobile net. I've shifted my net to mobile net. Now I don't know till what time we can continue because mobile net doesn't support YouTube streaming much. So we'll anyways cover value of supply chapter, and if the issue of net is not solved, then we will take place of supply tomorrow in the next stream. Okay, chalo. So now moving on to Rule 33. Moving on to Rule 33, which talks about pure agent case. Rule 33, which is pure agent case. Now, Rule 33 says that if supplier is incurring any expense because the recipient authorized supplier to do so, and the expense is because of a contract that is arising between recipient and some third party. Let us take an example of roly-poly, right? There is this question in your question bank named roly-poly only, where roly-poly hired Mr. Rudra as his agent, as his customs agent to get the goods cleared. Now in this case, the Rudra agreed to take a consideration of 5 lakh rupees from roly-poly as the customs agent to clear the entire goods from the customs port. So which means, of course, 5 lakh are the actual agency charges that Rudra is charging. So that is anyways going to form part of value of supply, and this will be taxable. Plus there are some other expenses of, let's say, 10,000, 20,000, 5,000, 7,000 that are and that are paid by Rudra separately. This is for the import duties being paid at the port. These are some dock charges being paid. These are some loading charges. So these charges actually are incurred on behalf of Roly Poly. No, Roly Poly is the one who is liable to pay import duties and etc. And this is paid because Roly Poly has a contract with some other third party, with customs authority, with other people. Supplier Rudra is simply making these payments because Roly Poly authorized Rudra to do so. And therefore, as a supplier, if I am incurring some expenses on behalf of my recipient and then I show them separately in my invoice and recover them on actual basis, then these will not form part of my value of supply. But let's say there are some telephone charges, traveling charges, or let's say hotel expenses. Now these are also incurred on actual basis because I went on the port to get the machine cleared. I actually incurred traveling. I actually incurred hotel expenses. I actually incurred telephone expenses, and these are the actual amounts that I am charging from my recipient. Then this will still form part of value of supply. This will still form part of value of supply. Why, ma'am? Because understand here, there is a condition saying that whenever supplier incurs these expenses as a pure agent, no, supplier should never use these goods services for own interest, should never hold the title for these goods services. But if I have traveled, I have took the benefit of traveling. If I have used mobile phone, I have took the benefit. If I have stayed in a hotel, I have took those facilities. No, which means I have used these goods services. Now, even if I recover them on actual basis, still they will form part of value of supply. But expenses like import duties, dock charges, loading charges, transportation charges, now these charges, because I am authorized by my recipient to incur these charges, because recipient has a contract with some third person, I am simply a person paying these amounts on his behalf. Therefore, they will not form part of value of supply, but the condition says very clear that these should be separately mentioned in the invoice. If let us say Rudra gave, let us say, an invoice of flat 10 lakh rupees. He said this includes everything, all expenses that I have incurred plus my agency charges. Then entire 10 lakh will form part of value of supply. He has to mandatorily give the expenses separately that he has incurred as a pure agent. Then these will not form part of value of supply. Say yes or no, absolutely clear to everyone. So we are saying expenses incurred by supplier as pure agent on behalf of recipient, because recipient has a contract with some third party and recipient authorizes the supplier to make such payments, and they are separately mentioned in the invoice along with the original supply that he has provided. Then in that case, we will say they will not form part of value of supply, and the supplier, means the pure agent, should never have used such goods or services for his or her own benefit, should have never actually thought of taking the title, should not have earned anything out of it. Your heart is very pure. Whatever actual you are incurring, that same actual you are recovering from the recipient by stating them separately in the invoices, then they will not form part of value of supply. Just like Airport Authority of India and passenger we have. Now, because you as a passenger go to airport, you use the washrooms of airport, you use the air conditioner of airport, you charge your mobile phones there. So basically you are using a lot of facilities from the airport. But airport directly never charged any amount from me. Why? How? Because what airport does is, Airport Authority of India tells the airline companies that whenever you issue invoice to the passenger, no, at that point of time, you separately mention the amount of passenger service fees and user development fees. You separately mention the amount of passenger service fees and user development fees that airport wants to charge. But airports tell the airline company to collect these amounts from the passengers and give them to Airport Authority of India, which means Airport Authority of India is the supplier, passenger is the recipient, and airline company is simply the pure agent collecting the amounts and paying them on behalf of passenger to Airport Authority of India. So he is the recipient. He will only get ITC on the GST paid on PSF UDF, and airport will be liable to pay GST to government. Airline company, this is neither purchase for airline company nor sale for airline company. Simply whenever they will issue the invoice, means the ticket to the recipient, in the ticket they will separately mention the amount of UDF and PSF, that this we are not keeping. We are simply collecting these amounts on behalf of Airport Authority of India and giving these amounts to Airport Authority of India. So airlines collect from passengers by indicating separately in the invoice, and airlines here are acting as pure agents, and therefore they cannot take ITC of passenger service fees or user development fees. Understood. Then final last two rules, rule 34 and rule 35. Rule 34 says that if the transaction that you're undertaking is not in rupee, let us say I purchased this calculator for $50. I purchased this calculator for $50, but GST in India is required to be paid in INR. Then what to do? If the transaction is not happening in INR, but GST on all the supply transactions have to be paid in INR. So for whatever goods you are dealing, the Central Board of Indirect Taxes and Customs rate, CBIC rate, as on the date of time of supply, CBIC rate as on the date of time of supply, you have to pay to government. So $50. What was the CBIC rate on time of supply date? Let's say 79 rupees. So I will convert 50 into 79, and then whatever is the applicable rate of GST, this GST I will pay to government. But this is for goods. If I'm dealing in taxable services and dealing in any currency other than INR, then generally accepted accounting principles, whatever is the gap rate on time of supply date, that gap rate I will take to convert the forex currency into INR and pay GST on the same. Understood? Goods, CBIC rate, time of supply. Services, gap rate, time of supply. To convert the forex currency into INR and pay GST to government. And rule 35, if I have to teach you, we should simply shut the video, go home and sleep. Why? Because rule 35 explains us to make back calculation. Tell me, if I tell you that 500 is inclusive of 18% GST, what is the exclusive amount and what is the GST amount? Chalo. 500 is the total invoice value inclusive of 18% GST. Give me taxable value and give me GST figure. Ma'am, very simple. Taxable value will be 500 divided by 118 percentage, which comes to 423.7288, and GST amount into 18 percentage is going to be 76.2712, whatever it is. This is what the rule 35 is teaching us, that to make back calculation, value of supply will be inclusive value upon 100 plus GST into 100, and simply how to calculate the tax amount. So this is how we do back calculation and calculate exclusive values and GST from inclusive figures given in any transaction. Say yes or no. Done, ma'am. And here we finish off entire chapter of value of supply and time of supply. This was a super efficient revision, I would say. This was literally a breathless revision. I did not even took 1 second break. So section 12, 13 and 14. Section 12, 13 and 14 for time of supply, and section 15 for value of supply, that we have completed only in 1.5 hours, not even 1.5 hours. It is less, it's just 1 hour 29 minutes and some seconds here. So in fact, even 1 day prior to examination, no, you can, because you have already listened to this lecture today, and you will be listening it to 1 or 2 times more while revising. During exam day, even if you can listen it at a speed of 1.5x on YouTube, no, then only in 1 hour you will be able to recall all provisions of time and value, and then simply whatever ABC questions you have marked, you can solve those questions and go to exam. So these marathons that we are taking, I am not catering to any doubts that you are asking in comment section for now, because I want to keep it super efficient and effective, that 1 day prior to exam, it does not waste your time, and you can cover everything from these marathon revision series only wherever you feel like you have a doubt. Chalo. Whatever doubt you have, you can simply connect with me on Telegram channel. The link of Telegram discussion group is given in the description of this video only. How to contact me, my Telegram ID, my channel, the discussion group, my mobile number, Instagram handle, LinkedIn handle, everything, Twitter handle, everything is mentioned in the description of the video. So do make sure to check out and connect with me in case you have any doubt. Now, because of internet, we cannot continue further. It's raining very heavily. In fact, I don't know if you are able to hear the voice or not, but the rain is also distracting and it's very loud. So We'll continue from place of supply in tomorrow's class. Same time, we are meeting 2 p.m. every day. The target is to finish entire GST like 2-3 hours daily, and we'll complete in 5 days entire revision of GST. Customs lectures are already uploaded for May 24, and they same are applicable for November 24 also. Right? Chalo. So we'll meet tomorrow, same time for place of supply chapter. Till then, take care and bye-bye everyone. Hope you are enjoying the classes. If yes, do like the video. Share it with your friends, juniors, seniors, everyone, whoever are in need of 100% revision classes. And do not forget to drop a comment after the video so that YouTube also keeps recommending the classes to other students. Chalo. I'll meet you all tomorrow for place of supply. Till then, take care.